We are just now getting some new housing starts data. Rick Santelli is standing by at the CME in Chicago. And Rick, the numbers, please.
Yes, Becky, a bit of a miss on housing starts. We're expecting a number around 1.6 million seasonally adjusted annualized units. We end up with 1,555,000 and a slight downward revision to last month. So that puts this number down a little over 1.5%. And if we look at permits, also a miss, expecting a number close to 1.7 million. We ended up close to 1.6, 1,589,000. Also a subtle down revision on last month, but that puts it down over 7.5% on permits. And permits is what we were sort of counting on. We know there's a backlog. We know there are issues, whether it's labor or materials, and prices up, close to 20% year over year, but permits really got dumped. And in terms of starts, we know there's issues between single family and multifamily, but in the end, maybe even interest rates, which have crept up a bit, could become part of the picture, although still historically low. And speaking of interest rates, short maturities are coming down in yield, up in price a bit. We do know that we touched 43, 44 basis points in a two-year note yesterday. That was close to a 20-month high, basically right around the beginning of COVID. Whereas the longer maturities, well, a little bit different scenario. So much of the flattening has been done on the long end. Now we're going to see if we get a little steepening because maybe short rates have gotten ahead of themselves. I can't expect that the Fed is going to be tightening aggressively in the future. But inflation has gone from transitory to a big hunk of gum on the bottom of our shoes. And I think the long end is evident by flirting with the weak unemployment. High yield closes around 161 is an area we want to keep up with. And 30-year bonds seem to be the most aggressive as of late. And anything that includes the 30-year, as I said earlier, is more inclined to be moving from steepening more toward a flattening mode. We want to pay attention to the yen. It's at a three-year low against the dollar, but the dollar's at a three-week low against all European currencies. Becky, back to you.
Rick, let's hope inflation is just gum on the bottom of our shoes and not something much smellier that we stepped in along the way.
Yeah, I'll tell you what, no matter how we slice it, inflation is going to be hotter for longer. And the problem is, once things are hotter for longer on the pricing side, there's just certain issues that aren't going to reverse themselves down. We see big general moves in commodities, but even some of those, of course, have reversed some of their come downs and reversed higher. Think energy. I think at the end of the day, the Fed's biggest problem is going to be how much higher interest rates can go without affecting the servicing of the debt and how the Fed fits into that process.
Yeah, a lot of questions to be answered. Rick, thank you. Steve Leisman joins us with more right now. What do you think of the numbers, Steve?
I thought they were okay. The big decline or the big miss there was in the multifamily area. That had rocketed up a bit in August, and so some payback was expected. It came down to 475. Actually, if I got this right, single family starts were pretty much in line with August. So it was really a change in multifamily, and there's a lot of volatility there. The other thing that's kind of interesting is looking at it by region. You had this 27% decline in the Northeast for starts and a 6% decline in the South. We had Hurricane Ida moving through that month, so there might be a reason here for what's going on there. Same thing in when it came to permits, minus 20%. I don't know if that had an effect. The other big question, Becky, I think you have to ask yourself is the extent to which this number is limited or will be limited by some of the supply shortages, with builders not having the ability to get either the workers or the materials to make the to build their homes. On the Fed, we've been watching this, and I think Rick for sure alluded to this when it looks at the probabilities. Becky, I'm just looking at about a 50% probability of that July rate hike. And what's happening, I think, is that people are building in a little, a hedge on what the possibilities, how the Fed might respond to persistent inflation. You have a story where it's going to last longer, and whether once the Fed gets done with reducing its purchases, if that then brings the Fed to rate hikes in the summer of 2022.